like those will pop up.
Okay. Sounds good. We got to stop talking shit now because we're on the record.
Right. Happy to be here.
All right, guys. I'm well, actually, before we start, is it 4 moons or To the Moon Capital?
4 moons.
Change it to 4 moons.
The first one was To the Moon, and this one was 4 moons.
Yeah. Just so happens you're not allowed to imply returns with the name of your fund, and so we had to go from To the Moon to something else, and we wanted to stick with the moon idea. So 4 moons.
Amazing. Okay, the Grand Wizard Jason Hitchcock, the most popular podcast episode I've ever done, is back with his friends, the other moon men of the To the Moon Fund, which had to be renamed the 4 Moons Fund because they could not imply that they were going to go to the moon or be able to take you there. But I'm glad to have the whole crew here, and excited to have like a party of a podcast with Jason and Adam and Boz.
Well, thanks for having us back. I'm glad that Boz and Adam could come with me. That was a really fun conversation we had last time, and a lot's happened since then. And I'm really excited for you and all your listeners to meet Boz and Adam. They're my business partners, and they're part of the reason why I learned a lot that I had to talk about with you on that episode. And we're doing some cool stuff now.
I know we barely fit like me and Jason into a 2-person conversation. So I'm going to be excited to see how 4 people goes, who are all equally enthusiastic about all of the crypto things.
Super excited to be here.
That's Boz, and we got Adam too. Let's do little intros for everybody. You want to go first, Adam? Alphabetically, the CIO of To the Moon, No Wait, 4 Moons Capital.
We don't really have titles because we all have to pull so much weight in a new partnership. But yeah, I'm Adam Atkins. Met Boz personally, I want to say about a decade ago, completely unrelated to our current venture. But, thankfully, Facebook connects the world for forever. Thankfully, or not thankfully, but we have friendships that follow us around through Facebook. And I'm one of the guys that found crypto on my own. It's rare to find people like that, but I got in about 2016, just kind of Googling investment ideas, and Bitcoin came up in the headlines because the Indian rupee was, being devalued, or there was some kind of an inflation issue. And I was like, wait, this science experiment is still around? Like, I thought it was like a flash in the pan and was going to go away forever. And that's when I fell down the rabbit hole. So
nice.
Yeah, Boz and I connected in like 2019 when we were talking about taxes for crypto, and
we common pain point
since then.
Yeah,
exactly.
Nice. Boz, what's your story? How'd you end up with these clowns?
At a circus, of course. So I guess as we met Adam, like you mentioned, a decade ago, kind of kept in touch here and there. And then when I moved to San Francisco, one of my really good friends actually introduced me to Jason. And at the time he was at Twitch, and I was at a blockchain gaming rewards company, and just really interested in gaming overall and how Twitch sees things. And he was just full of energy, a really smart guy. We just stayed in touch and continued learning about each other and developed this amazing relationship. How we all got together is I knew Adam was definitely into Ethereum from our Facebook posts, and how Facebook at the time continued just plugging away at life updates.
Yeah, his face tattoo is a dead giveaway.
It's his meta on the forehead. And it was really interesting is when DeFi Summer started, we were both pursuing a completely different path within DeFi, but it was complementary of each other. And this is when Compound just allowed us to collateralize ETH and unlock DAI onto the world, which released a flood of innovation.
And helium routers were for sale.
And helium routers were for sale. So and so we were iterating on a bunch of different things at the same time. The vampire attack on sushi, or I mean on Uniswap, came to be. So I was definitely all about Sushi Swap, and it was in the Discord when SBF was in there just trying to make calm and everything. And Adam and I just kept like really close, and we're just sharing a bunch of ideas over the summer. And then I started seeing tremendous amount of success. I mean, at the time, sushi was yielding, 2,000-3,000% APR all the way up to whatever. It was kind of surreal at the time. And what I decided to do at that particular time was I wanted to see if I could replicate these same strategies with one of my close friends, which is our fourth partner, Ash. And he started seeing success. And at the same time, we're having these conversations with Adam, with Jason in these private group chats about how to build wealth and think about like strategically how, we're all invested in each other's success, and just sharing ideas to compound or accelerate our approach to achieving that success. So achieved that success with Ash, then brought in Jason. We succeeded with Jason as well. And then Adam comes in and says, okay, here's how you collateralize ETH, right? And so we are using BZX. We launched, a considerable amount of collateralized ETH onto Harvest.Finance at the time, saw a tremendous amount of success. And then we got into a shared group and we were just constantly sharing ideas. We couldn't stop thinking from morning until whenever Jason goes to bed. Which is never
He never sleeps.
He never sleeps. And so at the same time, I'm currently the COO of a cloud infrastructure company, and there's a seed sale investor part of the company that was a chief investment officer of Kingsley, which is a digital asset fund that we are now sub-advising for the DeFi fund.
Yeah, we got to come back to Kingsley, because that's a whole
that's
interesting.
A whole
you're in chapter 9, Boz. We gotta like catch up with Jason here. So
okay, I'll stop there.
Can I just from my perspective, it's real simple. We created a group chat. The whole point of the group chat was make more money. We're all entrepreneurs who have made money for companies, and so we all get pulled into one group chat as we understand we all like crypto and DeFi. We start basically building what I like to refer to as the hot ball of money that you constantly roll around DeFi. And it goes from one high yield opportunity to another. And we're together taking screenshots of Uniswap and LP positions we're creating. And we're like, I put in X, I'm earning Y every day. Look at what I earned today. And it just makes it more real to everybody that these are real moves that you should consider. We started copying each other's homework. Boz would, he's in the Cosmos ecosystem, so we would just learn so much about it from his perspective. We developed biases towards Luna and Rune and other interoperability plays that ended up being strong themes that emerged that year. And we all made really strong investments. Next thing you know, we're screaming about this to everybody. And a lot of our friends asked us to do a fund. And that's how we did our first fund. And we just took our same strategy that we did and applied it to that fund. And Boz just mentioned Kingsley, and so we can talk about that in a bit.
Yeah, well, that first fund killed it. You guys returned 2.5x in 5 months, 6 months.
Yeah, we deployed it in the middle of summer. It was a liquid token fund, so
yeah,
a lot of it wasn't a VC fund, we weren't angel investing. We were just doing what everybody does, where they learn about tokens on Twitter and they go look on CoinGecko and you go check out the Discord and is this a product that people like? You do the kind of gut feeling testing of a product, like, is the revenue looking good? What open data is there? And then, we would invest in it, and we built out a portfolio of exciting tokens that just, and we earned a lot of yield off them. That's kind of like Adam was the keeper of our yield strategy, and we earned a tremendous amount of yield, and we're really proud of that. And we feel like we proved that could be like a financial product that we could continue doing.
Yeah, I mean, that all that in addition to like growing your own hot balls of money, which individually, I believe, right? I mean, I know Jason's doing that. I assume you guys have your own side balls as well.
I mean, these guys.
So Boz has a job, so I don't
Boz
know
has a job.
that
yeah,
actually
the other guy.
do, but we're fun employed. I was splitting my time between the fund and my own personal finances. So I didn't always duplicate my efforts because, we had to be a lot more pragmatic about our investment opportunities for the fund. However, Boz is an ape in his background there. We did a lot more aping in with our own personal money than we would have, the investors. We're a little bit further out on the risk curve when it comes to DeFi. We all have our own approach, which is kind of cool because we can contrast and compare and improve each other's styles that way. So yeah, like this is just a great team. The fund was a lot of fun. There were certainly some stressful periods. I wrote a blog post about all the things I learned and the things that kept me up at night. So, but yeah, it's been like the most amazing career shift and like budding friendship that I can remember.
What was a moment that was really stressful? I'm trying to remember what was like peak stress of the fund.
I think what I said in that article was taking profits. How many times did we talk about that in like our weekly portfolio review calls? It was like, hey guys, like this is up, 6x. I think we should take some off the table here. We could always buy back in lower. And it was constantly just butting heads. Like, no, we should let it run. The RLPs just want exposure, like tax implications. I'm like,
we would always argue against it because I would say we're not a trading firm. We don't know how to trade, I would say, even though
I'm a perfectionist. I want to always do the best I can, and I'm very competitive with myself. And when I see finishing at the 1 inch line and not scoring a touchdown, like, or maybe scoring a touchdown and missing the extra point, that's kind of how it always felt. So, but it worked out great.
It did, and you all made it, and you all still want to work together again after the first fund, so it can't have been that bad.
Well, the first fund was really just a vehicle. This is Jason talking. We didn't know what we wanted to do. We were achieving personal success with these strategies that Boz is describing. Borrow against your ETH, then do what with the stuff you borrow. Yeah. That's where like a lot of experimentation came in. And once we kind of had this interesting strategy, we sort of got that a little quicker than we knew what vehicle we should put it into. Mm-hmm. And so we created that initial 1-year fund, which had this nice sort of escape hatch at the end of it could go to shit. And we could still like, hey, it was 1 year. We tried our best. Thanks for supporting us. Mm-hmm. And then it also, let's say we knew what we were doing and we were onto something. We weren't over committed to a structure. We could then create something fresh. And we were like, oh, here's how you seize the moment. Like, for example, we knew that we wanted to create a fund that could go in early if we wanted. We could buy equity. Theoretically, this hedge fund that we work with, we could. We're probably not going to, but we have the option. We also know that like 4 Moons wants to create a staking service at some point. We want to give ourselves some sort of flexibility to do more than just buy equity or just buy tokens. We want to do a variety of money-making strategies, which could even mean we want to make some software that maybe people use and we earn transactions on. Who knows? And so this particular structure is perfect for that.
So it was essentially to validate our market thesis behind the service that we'd be providing. And keep in mind, this is in context of DeFi. People think DeFi has been around quite a while, but that's just because people are in crypto. So a month and crypto speed, is 1 year in crypto is like 15 years in a traditional company. But essentially the SPV, the special purpose vehicle fund, was designed to just test our market thesis behind our strategies. If we can actually scale it significantly, and we did.
And that first fund got bought, right? Is that the right verb for what happened? Like why did that fund end, or how did it end, I suppose?
Yeah, so I wouldn't use the term like bought. So at the same time, we're having quite a bit of conversations with the Kingsley team. And the interesting opportunity is that as a special purpose vehicle fund, you're limited on what you can and cannot do. With how much you can actually fundraise. I mean, even solicitation could be really interesting and semi-grave, just because DeFi is still largely unregulated, and even the regulations around managing other people's money is very limiting depending on what you're licensed as. Hence, the special purpose vehicle funds allowed us the flexibility to tap into our existing network of really close friends and family. And we limited that explicitly. When Kingsley approached us, not only did they have the infrastructure, the licensing, the know-how, the experience of managing digital asset funds, but the culture and the values of each individual partners actually really aligned well with what our goals and vision were to generate and build a $100 million DeFi fund, which in my mind is a starting point.
So give us the background on what is Kingsley?
Kingsley is a registered investment advisor. You can think of it that way. And they have a digital asset fund as well. But they approached us with an idea of us essentially becoming sub-advisors to their DeFi fund product and allowing us to take essentially the strategies that we've succeeded and validated with success in our SPV, but do it at scale. Because given with their infrastructure and their licensing and a variety of other things, it allows us to do more, pursue more opportunities, and not really worry about the back-end operations that we have to shoulder ourselves. So it allows us to move faster, it allows us to scan for better opportunities, do more due diligence, and really focus what we're good at, which is generating returns.
And also, this is Jason. One of the things that we also talked about with them, they did extensive surveying of like RIA networks, and they found, and who are the people that they serve? They serve high net worth individuals that are working with boutique financial advisors. These are not, they have an option of getting an account on Fidelity or Schwab and having someone go put their money into Vanguard. That's what 60% of people in this category do. 40%, they go to a boutique RIA who can invest in clean energy or something interesting. And so what a lot of people are looking for, they want exposure to crypto, and they also want more than just, I want to buy Bitcoin. And what they don't have access to right now, if you are a high net worth individual working with an RIA, they don't have something on their menu that's like all the cool crypto assets that are like taken off of DeFi and web3 infrastructure. They have like access to Grayscale, which is like not even a good investment because of like the premium. And so like what we're going to represent one of the first products that they have, which is like, oh, this is going to get you in Osmosis and Luna and Convex and other interesting yield bearing strategies. This is a smart, this is basically a degen product, for some of your long-term money, that's pretty interesting. So, and that lines up with the surveys of what a lot of individuals want. And so it was a good fit. We have a thing that works, and they have a network that's ready to buy it.
That's super interesting. Jason, go ahead, Adam.
I spoke to, actually, before we launched our fund, I was looking at getting licensed myself. And I spoke to several RIAs who, serve these types of clients. And none of them really knew much about crypto. I would say that this is probably the first time in the history of the financial markets that the end customer is more educated than the salesperson that they're getting their information from. It's really interesting how organic and grassroots the crypto movement has become. I mean, one of the partners at Kingsley told us that even grandma and grandpa are asking about crypto, and the RIAs that they work with have nothing to offer them. So it's a really fantastic channel for Kingsley. I expect that to require quite a bit of education on Kingsley's part to actually make sure those RIAs understand what it is that we are doing. But it's an awesome opportunity, and they've done so much of the heavy lifting on the compliance, the regulatory, the licensing, the legal. It's a huge moat for them. So we're really excited to get going.
Yeah, that's got to be a bear, I'd imagine, like so early in this, as Boz mentioned, like the regulations involved and stuff. So just getting people arranged. So where is this, like Kingsley's got a pool of money already that you guys are kind of managing? Like what is the sub-management relationship? Or is this like you're both kind of working together to raise a new pool from existing customers of Kingsley? Right. Okay.
That's exactly right. We are sub-advisors. And what that means is we go into a document called the PPM. Think of this like a marketing kind of contractual document. They're going to go they're going to go distribute our fund around. They're going to go knock on doors and raise money. And that will all flow into like our investment strategy. And, you know, yeah.
And you're
It'll be a
targeting
continuing fund.
and you're targeting 100 million for this fund, right?
That's where that's how much we sort of have in like sort of soft commits. And then, so we're going to be onboarding that this year. And then beyond that, I mean, we have much bigger goals. We're never going to stop fundraising, and crypto is only going to get more popular. I mean, our goals are to get this into several billion under management.
Yeah, I mean, your initial tweet, I think, when you talked about starting this next fund was like, we're launching $100 million fund. Our goal is $1 billion in AUM in less than 5 years. Same degen approach, just a bigger stack in play.
Yeah. And it's just, we think that what's interesting when you talk to a lot of these people, these high net worth individuals and family offices, the way that a lot of people in your audience, like they have similar feelings about crypto that your audience does, where there's a moment of before, and then they realize, oh, that's what these are. These are apps, and like, oh, it's DeFi. They have the same feelings about it that everybody does, which is why like there's such this organic feeling of everyone's turning on to crypto. It's because everybody uses apps now, and everybody of all ages, they're all getting news on, you know, they're all reading about it on Twitter too. And so there's kind of like, it doesn't matter what your demographic is. Everyone's like hearing about DeFi to some degree, and they're very curious.
And keep in mind, just this is Boz. You know, this space is less than 2 years old and has a little over $200 billion in TVL. Now, what can happen over the next 5 years? Like when I originally was talking with the guys here about, can we get $1 billion in under 5 years? That takes into consideration time, which a lot can happen in those 5 years. Institutional interest is gaining steam. So I do see financial products, traditional financial products tapping into this DeFi movement. We're beginning to see even banks making announcements about potentially offering DeFi products under their umbrella, for as an example. So institutional interest across retirement accounts from everything, I think we'll tap into this DeFi movement. Regulation. And in between all that, I think a lot of family offices, a lot of people, you know, and in Main Street America will begin tapping into this movement. And I think the people who are making moves today, like our team, like Kingsley, several other DeFi funds in the market, it's a blue ocean of an opportunity. And the people that begin today will reap the benefits of tomorrow, which is mainstream adoption and mainstream demand. And right now the demand is extremely overwhelming, but this is extremely early still. So we can only imagine what can come tomorrow.
So let's talk about the structure of the fund. I totally agree with that, Boz. I think like there's this weird gap between like how many people know of it. Like everyone has heard of Bitcoin. And so you have this feeling that it's pervasive, but it's like the share of users who actually have a wallet that they interact with, like the adoption is still so drastically early that it's truly difficult to remember, is even, and especially maybe for those of us who like actually spend time learning about it. But let's talk about the fund. So this is going to be obviously a little different since you're working with a bigger pool of money and some kind of registered RIAs than the first sort of initial tester fund, right? Like what are the terms? What is does the strategy have to change? Like, I don't know. It's just so different from a traditional VC that I'm really curious, like how this all fits together.
If I could summarize it really quickly, if the last fund was a 1-year fund and it was like $2.5 million, we were throwing darts at things that we thought were going to pop in 2021, which is a difficult game. In 2022, what this fund is this is not 1 year, this is open-ended, so forever. And it's entirely liquid. So we're not going to be investing in things that get locked up. We're going to be investing in tokens that are out there that have decent market caps, you know, probably usually above like 300 million or so. And we're betting on a couple of themes: interoperability, alt layer ones. Like we think there's going to be just more demand for apps. And so that demand is going to flow into Cosmos and Phantom and Near and Polygon and Avalanche. And those are going to be huge. And there's going to be technologies that need them to interoperate. And so we're going to be investing in those. And then we're also going to earn yield on them. Every single one of these layer ones, They all have money markets. There's ways to earn more. There's an optimal way to hold all these tokens. And so one of the other differences is we're going to have many more positions. We have a bigger pool of capital, so we don't need to place our bets so carefully onto very specific ones. We can spread them out and have more of an index that represents our point of view. And our point of view is alt layer ones and interoperability. It basically just means more demand for usage of applications on blockchains, and then everything that flows from enabling that.
Yeah,
Yeah,
that's
like our point of view.
Go ahead,
Our point of view is gonna change. Like that's the one thing that we can tell you is 100% gonna happen, because our point of view started in, way over to the far, miles down the road for Titan, our first fund, and ended 100 miles to the other direction. So the flexibility and maneuverability is probably going to continue to exist with this next fund. We will have to be mindful of, since it's a larger pool of capital, we'll be learning about, how to deal with liquidity. Jason said $300 million. That's definitely, a low end. If we're moving significant amount of capital, fortunately, we are working with Kingsley's CIO, who is an experienced trader who understands, time weighted average pricing, how to get in and out of positions intelligently. And we're not just going to be shoving, 7-8 figures into these protocols, because that's going to really have an impact on the market. So having their CIO is a huge advantage for us. It's like, I say this all the time, 1 + 1 is 3. It's like our strategies, we're long only, hypothesis driven or thesis driven investors that leverage assets to make them productive. Kingsley CIO is a experienced technical trader with a vast network of founders and a really good understanding of the technologies themselves that we're investing in. So when we combine our strategy that from the previous fund with their liquid, trading strategy, it's going to make the fund a much more effective vehicle. And I'm really excited to learn from them as far as, what's the best way to get in and out of markets? How do you rebalance periodically? These are concepts that we did not exercise in the first fund.
Yeah, it's super. I mean, the combination of if you've got the flexibility that it sounds like you can, and the number of just ways to win like in DeFi is crazy, right? Like Jason and I talked a little bit about this in our first conversation. Like, what does the optimal vehicle look like? It's like you're holding tokens, you're staking them, you're running validators, you're LPing, and this, like, there's just so many. You're earning airdrops. Like, are all of these things stuff that like the fund will be pursuing, that, and all of the value to that comes back to investors?
Yep.
That's awesome. I mean, the layers of complexity there, the gas efficiencies of like doing that in one thing, like,
not to mention the new innovations around how yields are even generated. I don't know if you're familiar with the Osmosis DEX. It's the leading DEX on Cosmos.
Thanks to Jason, I am.
Yeah, thanks.
It's going to be one of our largest positions in our next fund.
Yeah. So they're actually introducing something called liquid staking. And so today, the user, in this case, just a brief, because I think it's a really innovative thing that is worth mentioning.
Yeah, please.
Today, as a user, if you're on a proof of stake network, you like you're staking Atoms or Polkadot or whatever. You take your assets and you stake on a validator, and you're earning yield, whatever that yield is. Or the user in this case could become a liquidity provider and basically get 50% of 2 assets and go into a DEX and then earn the yields from there, from trading fees, inflation, what have you, but you're subject to a permanent loss.
Right.
What they're doing is like a hybrid approach, where you can become a liquid provider into a decentralized exchange, which obviously provides value for the DEX overall, more TVL stake there. But by doing so, you're automatically staked with your Osmosis onto and earning the yield from just staking alone.
It's like you're staking and LPing at the same time.
Correct. So
interesting.
So this is complementary to another way we can think about it in terms of like capital efficiency. previously, like think of like DeFi Summer 1, 1.0. The real innovation was collateralizing ETH, borrowing against ETH, deploying capital, whether you're on a DEX or staking and what have you. I think today it's going to be liquid staking mechanisms where you are staking and borrowing against your stake, whether it's on a validator, on a DEX, like a liquid staking approach, where you're still earning leads and having like a self-repaying loan, like Alchemex actually created. So all of these, like what DeFi Summer 101 is, like they created like specific recipes. DeFi Summer 2.0, I think, is going to be about combinatorial innovation, where you take the best thing of one protocol and then combine it with another. Liquid staking, self-repaying loans, and a variety of other things.
It's the concept of rehypothecation, where it's like, yeah, it sounds scary and it's a big word, but it's just a way to be very capital efficient. And the protocols do this for us now, which makes our lives so much easier.
Yeah, I mean, and if I know you guys, like I think I do, there will be some leverage involved as well, and like actively managing, kind of borrowing against some of these things, recollateralizing some of this like fractal borrowing. We've seen just go to crazy places.
Yeah, we'll probably borrow stable coins and put them onto convex. It's just
like I think we try to, I mandated the first fund, we're never going to take more than 50% loaned against our collateral. Getting liquidated is the last thing any of our LPs would want. And as a number of us have already felt the pain of being liquidated, I would not advise anybody to take leverage if you're not experienced. And watching this like a hawk on a daily basis, it's the most volatile asset class. Like, I don't know how many times we called each other in the middle of the night, like, hey guys, like, crypto's down 20%, check your collateralization ratio. Like I woke up, these guys each and every time. And that's the nice thing about having 3 time zones covered, at least.
I have had a 5 a.m. phone call from Adam about my loan, a loan that I had on Maker. Thank you.
Yeah, we were texting Jason at like 2, 3 a.m. Hey, do this, do that.
I had to do something. It saved me. Thank you.
Is that why you guys sent Jason to Miami?
Yeah, he can take care of his own ass now.
Jason was so excited to get out of San Francisco. He just left all his jeans in a pile in his apartment, moved to Miami.
It's actually true. I did. I didn't really patch. I don't know if you,
he's now wearing a fedora regularly. I've noticed on his Instagram. So it's a good look.
Okay, so let's do. Well, I want to know before, like, how the fuck do you guys keep up? Like, you are professionals in crypto in a way that, like, it just seems almost impossible to actually like know enough about all this stuff. And anybody that I've talked to who's not like 18 hours a day in it, and even the ones who are, like, struggle to keep up. How do you filter signal from noise? How do you decide what to pay attention to? How do you live your lives like in this somewhat overwhelming industry with any semblance that like you're finding the right stuff?
I think that the community you belong to really dictate like success here, because as a single person, you just can't, it's impossible. So there's a few themes that like we've constructed. We initially started out by building a community of a small, close of friends, and everybody's well aligned in terms of what they're doing, and they were focused on crypto. So a lot of people, I mean, in terms of anything on Ethereum, I know when I have a question about ETH that I don't even understand, I go to Adam. He's a resident ETH expert, right? And so we build it out like this tribe of DeFi people that are experimenting all the time, and we bring in like the qualified signaling back to us. And that allows us to just work smarter, not harder, because again, it's impossible to keep up. Something that I do is I use Twitter holistically. I use lists to segment blockchains or DeFi based on blockchain ecosystems. So I have an Avalanche, I have a BSC, I have Polkadot, I have Cosmos, I have Luna, and anything that bubbles up as you're building the list continuously pop up. So you're actually leveraging the internet for the power it was designed to be. And if those signals are strong enough, they're going to bubble up on your console. And then you take that information, you do some due diligence, and then you begin asking your community, your tribe, your DeFi tribe. And you know, Adam and Jason took it even a step further, right? They built out their Discord communities, and they have like sub tribes in there of really, really smart people. So, you know, these signals is just tapping into the community for people who either have exposure to that particular protocol, have a deeper understanding than you do. I know one of our guys in one of our communities, Bruce, he's like the resident Phantom expert and BSC expert. Anything on DeFi, we just default to him. He knows. And if he doesn't know, we immediately like dismiss it.
I think that it's useful to have like I found it's overwhelming, and the only thing that's helped it clarify to me is my own selfish perspective of I'm only interested in making more money right now. And the idea, like, if I'm interested, when something new emerges, oh, people are talking about DopeX or they're talking about GMX, I have to ask myself, is knowing about this going to make me more money? And is there anything obvious about this in the first 10 seconds of me learning about this that's going to help me make more money? Is there a high APY for some early liquidity mining event? Is the token early and could go up? Or like, what's going on here? And if the answer is no to those two questions, I'm like, okay, cool thing to know about. I'm not going to know that much about it. And then I'm going to move on with my life. And I'm going to be looking for something that is better than my current portfolio. And that's it. That's the only thing that's helped me stay sane. And then I also think like figuring out that like, that's what gets me excited initially. And then I start to notice other kind of fandoms around tokens. And I try to pay attention like, oh, there's a fandom on this token. I wonder if they're right. Or I wonder if it's like a bunch of retail people being duped into something. And there's a way to like distinguish between Cardano and Ripple people and like people that are really into Tetranode's Gauntlet. Like when you, as you kind of peel back the onion, Tetranode's Gauntlet, there's a lot more going on there. And the fandom makes a lot more sense, or the Frog Army around the Danny tokens. There's a lot more of a thesis to these businesses succeeding, like charismatic leaders that communicate a lot, they ship often, they take a lot of shots. Some things work, some things don't, but they're doing a lot. And so like success is more likely, and there's a lot of excitement around it. And so the users are down to try stuff and pump tokens. I don't know, you start to feel that out to see what's worth paying attention to. Yeah.
Yeah, I mean, Jason, you got it as far as like, that is experience of like being crypto native and knowing what's bullshit and what's real, you know, or what's psyops and what's alpha. I mean, this is something that you must learn on the job. It's a trial by fire. Nobody can teach this to you. Obviously, like Boz has his own methodology for filtering the wheat from the chaff, the good from the bad, the, you know, ape in versus pass. Jason's got his own due diligence framework that works for him. That's super individualistic based on the DeFi user. I live, eat, breathe Twitter and Discord. I have been in this space long enough to know who the right people to follow are. I continuously update like my Ethropy alpha follow list, and the community members in Ethropy have access to that. And, you know, hopefully I'm helping them generate, you know, high alpha. There's a theme in crypto, like an acronym, WAGMI, we're all going to make it. What we all try to do is help each other succeed. And it can be competitive, I think, but it's rare. It's mostly a let's all grow the pie together theme. And like, I've decided in 2022 to kind of make that my motto. It's like, I'm helping grow the pie. I want everybody to feel the power and be empowered by what crypto can offer and what Web3 can offer. Because it's like the biggest revolution, I think, in our lifetimes in terms of tech, social, economic, you know, employment, combining all those things into, you know, one technology is like amazing. So yeah, like going back to how do I keep up? You can't. You know where to go in, and you know that you're gonna miss some shit. I totally whiffed on the dog token craze. If you hit that, good for you. But that was a big blind spot for me.
I think a good tip to how to pay attention, it feels like you should be following a cast of characters that are both in different places. Like there's people that are like the same person on Twitter, might have a Substack, might be in a Discord, and you might notice them in all the places. And it feels like you're witnessing a conversation in multiple places that evolves over time. If that's what it should feel like. And I would say if it doesn't feel like that, you're probably not as dialed in as you could be. And like a one really good way to get into that mode is you find sort of quote unquote thought leaders, people that are saying a lot. It's very smart. A lot of people are like vouching for them in many different ways. Who are they following? Who are they liking and retweeting? And then like those are how you find the interesting people. Follow this industry through other people at first.
Here's a question for you, Eric. I don't know how like much you're tuned into the crypto culture. I know you're in Yieldopolis, but like, do you feel like email is becoming antiquated because of the new communication mediums of like instant like chats, saved threads that you can do on like Slack, Discord, Twitter conversations? I don't know. Like, it seems to me like I spend so little time on email anymore.
I think that email, I have like the reverse. So I think crypto is underutilizing email currently. I think like it is true that a lot happens in Substack. Like, I mean, your newsletter is a great example. Like there are really strong kind of crypto newsletters. A lot of times it's just like, hey, I wrote a new blog post, which is like, fine, that's what half of email is. But I think when you go only Discord and only Twitter, like both on the learner or the creator side, like that's not a great, like you are not reaching as many people as you could or creating as close of a connection. And you still have that kind of like deplatforming or like just missed message due to algorithm risk. So I think you're right, but I actually think it's a missed opportunity on the like crypto creator side.
Yeah, maybe it's because it's so like blockchain is very transparent and anybody can see what's going on if they know where to look. A lot of the Discord servers and Twitter profiles that aren't, private, you can find these very public conversations. And a lot of our alpha is generated just from knowing where to look. So maybe it's a Web3 phenomenon.
It may also be like, interestingly, like email was inherent in Web2 because everybody was creating accounts and everything in order to use anything at all. And that's not true in Web3. So it may just be a distribution problem of like, they don't have the email list. I know some people who are working on sort of more wallet messaging, and that might be actually an interesting, like we may see an email complement or whatever come out that kind of serves that need between like project and wallet or project and user that isn't email, but is something sort of new in crypto.
Mm-hmm. That's an interesting point.
Actually, I just had a podcast with Shane Mack, who's building XMTP. It's a super interesting one.
Him and Matt Galligan.
Yep. Yeah.
Also, Etherscan just came out with Ether Chat today. That looked really interesting. I want to try that out.
Yeah, there's a few versions of it coming out, and a lot of this stuff will get more user friendly, I expect. Including the messaging.
The mobile apps eventually. I mean, we use Signal, and we love Signal because of the privacy aspect and like bigger conversations.
Yeah, I don't think Discord and Twitter are a good enough solution basically to like scale and bring everybody along.
Yeah, I think block explorers, especially ETH scans, will be the next Googles of the world. And I say this if you actually understand like the history of the internet, because if you're thinking about like 91 to 93 and all the websites and all the data that was generated in between that time, right? There was really no search engine that was even remotely usable or even existent. And then Yahoo comes in, which is indexed and made sense and organized this chaos of data and allowed people to search for information. You have all these transactions happening. ETHScan comes to the picture and organizing the transactions. The CIC, these are like evolving in a parallel like way that's complementary historically. But now you're introducing services on these block explorers. Chats is great. I think like some type of email client where you're plugging in your potentially just your address as your sign in.
Mm-hmm.
So it's still privacy preserving, but you can still build the communication layer behind all the information that's generated from all your transactions. And now you have this informational dashboard that's kind of like the next generation of suites of tools on the internet. So just plugging that in because it's a thesis that I've had for a while. That
do you guys like the analogies to Web 1? Like the
we
where
use it
are we
all
in
the
the
time.
90s? Okay. Yeah. So
we use it all the time. And we just, Jason and I just did one, but we use it all the time. I use it almost with almost every pitch or every educational video or every onboarding session for a close friend or even some interested party, because people don't really understand what crypto is, let alone what Bitcoin is. People say, I know what Bitcoin is, but I don't know what blockchain is, right? Like, but to connect with users that have minimal background for context, you have to relate a story to something that they know about. So even with DeFi, we say, okay, well, do you know what a financial product is for lending at your bank? Here's how we do it. Do you know what banks do, how they make money? Here's how we do it. So the more parallels that you draw, the analogies and the stories that you use that can connect with people with something that they truly understand, analogies are a powerful tool to get people to kind of just get it and not think about it.
I haven't heard somebody say before, like, we are pre the Google of Web3. But actually, I think that may be correct, and I like it. So where, like, if you had to pick a 90s year, what year do you guys think we're at?
I mean, it feels like OpenSea is kind of like Lycos, where it's got a bunch of categories of NFTs, and the way Lycos is like, well, we got sports on the internet, we got entertainment news, we got travel blogs. That's kind of what OpenSea reminds me of. And yeah, in whatever, 1993, 94, like when did we get search? That was good.
Yeah, so the evolution of the internet, and I'll send you a quick blog. I wrote this about 3.5 years ago.
Cool.
This is how I actually use my investing strategy. It's history doesn't repeat itself, it rhymes. Things had to happen in collective order and standardized orders for things to actually unlock. So World Wide Web happened in 91. Nothing really happened in between 91 and 94. The Netscape moment happened around 93, 94-ish, right? That was like when we generated millions of users with an easy to use GUI system, right? But Yahoo came out in 94. But making search easy unlocked commerce, because the year after that, Alta Vista was there, Amazon was there, auction web. So now you have search. What do people want to do? They want to buy, they want to shop. That's when the e-commerce came. Then a better search engine came, much better, faster, cheaper. That was Google a few years after that. Payments then became web, even that really unlocked Web 2 capabilities for the future. WordPress, LinkedIn, the Facebook, Flickr came out at the time, and then YouTube and on. Remember, like YouTube, Reddit, all these different things had some way, shape, or form like built on top of all this infrastructure stack over the last 10 years. So yeah, we're definitely pre-Google. We're pre, I think we're somewhere in the middle of Yahoo, and which is 94, and like introduction of commerce, which you could relate to OpenSea. OpenSea kind of unlocked this whole NFT craze, but I see them evolving much beyond NFTs, similar to how Amazon started with books, and now it's like, what can't you access on Amazon? OpenSea is the Amazon of crypto.
Interesting. Adam, you agree with that?
I wholeheartedly agree with Buzz. He is
Okay.
a student of history. I am much more left-brained, so I defer to Buzz on this question.
Jason looks contemplative.
The thing I think that OpenSea will ultimately get disrupted long term in every direction, like in the same way that like Craigslist is getting unbundled. NFTs are a really specific idea today that's really narrow, which is like these collectible JPEGs. And in the future, they're going to be more tied to more specific utilities. And we're going to have tons of marketplaces, but like, I'm not going to go to OpenSea probably to buy, like when Kyrie Irving has an NFT, I'm going to go straight to Kyrie Irving. I'm going to buy that through his social profiles or his I'm just not going to get it on OpenSea.
Or you're going to search for it? Is that what
Or
Boz
like
is
if
gonna
I'm
say?
going to build a video
So-
game, I'm going to go like I'm going to use like
Well,
the like what's it called? Like Unreal Engine is going to have like a library of like of NFT assets of like video game levels of AI for characters and skins and weapons and I'm in physics and I'm going to in music and I'm going to go to their library because it's a more tailored store for video game people.
well, that is not to say, I challenge that. So I don't think OpenSea will be disrupted. I think the current marketplace for what NFT serves or what OpenSea serves today is the V1 Amazon of just books. Books are like, that's fun, that's cool. But now let's think about NFTs and innovation, dynamic NFTs that evolve over time, ticketing, real estate, gaming, all that can actually be hosted on OpenSea. Maybe not on Ethereum until Ethereum 2.0 comes out, but I definitely see OpenSea becoming multi-chain and supporting other coins, other NFTs, interoperable NFTs, and then NFTs that pay that serve a specific niche within a market. You know, maybe
the best place to buy tickets. Are they going to be the best place to buy tickets?
I don't see why they couldn't be. Just like if you ask me the same question of, hey, can I stream movies on Amazon in '94? I would say no, because Blockbuster at the time was rightly positioned to do the same thing, and they didn't.
Interesting.
Right.
Interesting.
So now can OpenSea do it? Yes, I think it's theirs to lose. They can also pull off a Blockbuster and say, no, we don't need streaming. And Netflix can come and take their lunch money. But I think where OpenSea is positioned today, not only do they have first mover advantage and billions in revenue, but I think if they continue innovating and expand their capabilities to support, like I saw a proof of concept for these dynamic NFTs where you get a digital pet, like think of Tamagotchi, right? You feed the pet, you do and then like as it grows over time, you could see it growing, changing colors with the seasons and all these different things. Now you extrapolate that to like gaming and streaming and music and tickets. I don't see why OpenSea couldn't have specific modules that serve a particular market, no different than what Amazon does today with gaming, music, products, hardware products, and everything in between.
So my skepticism of that is that they're gonna have to pull out lots of miracles to have the right interface or whatever, a good user experience for each of those. Maybe they'll become some back-end API, and what they do is they index everything, but they're not gonna have the best music player or the best movie player.
They've already pulled off a miracle and they're walking on water. That's all I'm saying.
If they've peaked, this might be one of them. They've raised a shitload of money. Speaking of NFTs, or something I want to ask about the sort of paradigm of the fund is, are you guys DeFi very specific focus? Can you get into NFTs? What about, is it only like revenue producing NFTs? Like, as you mentioned, it's a super broad thing. Where did like NFTs and metaverse sort of fit into the fund's vision?
We've carved out a category for it. Like we want exposure to the big themes that we think are high growth over the next 3 to 5 years. And like, we think that those themes are alt layer ones. So like Luna, Phantom, Solana, Avalanche, Polygon, like all the demand is going to go to these things to build more apps, interoperability. And like we've also chosen DeFi. Like we've picked sort of a DeFi thing to bet on each platform. Like for Avalanche, it's Trader Joe. For Cosmos, it's Osmosis. I think we have an Astroport position for Terra. And then and so on and like Spooky and for Spooky Swap for Phantom. And then we're also we are looking at metaverse, and like there's gonna be specific allocations in there that are like still TBD, because we still don't feel like there actually is the best we're not really that satisfied with all the ways you can get exposure to the metaverse. And I think we're waiting for a good asset. We've also discussed like we could buy some floor punks and some like floor autoglyphs, but we're actually not, we're kind of hesitant to do that, even though those are pretty liquid. So yeah.
Yeah, Adam, I loved your blog post, your newsletter, the 2022 predictions. And one of them that jumped out to, I pulled a couple, but one of them that jumped out to me that I thought was interesting in the context of the fund was the majority of metaverse returns will resemble DeFi from 2021. And that got me thinking, like, you know, how does that fit into the fund? Where do you see those emerging?
Yeah, I know from experience. I bought Merit Circle at like $8, and I think it's somewhere around 3 right now. And I locked my liquidity for a year. So there's really nothing I can do about that. Talk about, you know, worst move of 2021. There you go. I think there's going to be very few winners in the metaverse, at least in the next 6 to 12 months. I heard people say the metaverse is going to have the ICO moment, where they can raise a ton of capital when markets are frothy. But when the rubber meets the road and it's time to put that capital to work, they have to pay their people. Mm-hmm. So the first thing they're going to do is sell the, you know, ETH or whatever assets that they raised in the treasury. Something that's changed though since the 2017 ICO bubble was they're no longer just raising ETH, like they can raise stable coins. So that's, you know, that's one way to kind of get around that liquidation. So yeah, it's a challenge picking the right metaverse or games. I mean, metaverse is huge. You could say there's gaming, there's NFTs, there's like social networking, lots of themes underneath this metaverse umbrella. And it is totally an arms race right now, with very few kind of obvious winners. Like you have your Axie Infinity, they were the clear 2021, you know, gaming winner. There's some beautiful UX stuff coming out of like Star Atlas. It's a Solana game where the NFTs themselves are the spaceships you can buy, and they generate yield. It's a very cool concept. But that roadmap is like 3 years long until the game will be ready till 25. So, you know, you have to take a very deep dive in the communities and the developer base, and like that's something that we really need to sharpen our pencils on before we make significant investments.
It feels like it's investing in a hits business. Like it's like the metaverse is almost like investing in IP, and everything else is like investing in companies that like and it's there's also just a lot of investing in stuff that's pre-product. Like there's a lot of interesting roadmaps, but like hits business, like are they going to get users? Do users want to go to that? And then like even just a question to your audience, like what's the one token you can buy that is the metaverse token? And I know there's a metaverse index out there, but like, is it a guild like YGG? Is it a game? Is it a specific NFT? Is like, what's the piece? Is there a piece of infrastructure like Arweave or something that every metaverse thing is going to like use? I think we just generally also believe like the metaverse is going to get adopted. But it's like, there's anything that's sort of like raising money on, and then consumers will come here. Well, we want to wait for consumers to go there, and then we want to buy the token.
And you want the critical mass of users to show up at Web3, right? There's only 100,000 wallets or whatever right now. Like that, you can't build huge numbers on that user base yet. Sorry, go ahead, Buzz.
Yeah, well, one of the things I also look for is, I mean, this is kind of like building. You're right. Gaming is a hits business. The metaverse and gaming can go together here, but there are also other hybrid solutions. So I take a look at what gaming studios with hit games and how they can actually plug into Web3. There is a project coming out within the Cosmos ecosystem. So we'll give a plug, something called Craft Economy. Think Minecraft, it is Minecraft. And imagine a DeFi layer built on top of that. So you have a critical mass game with 10 million daily active users, one of the most popular games in the world, web-based, and you're implementing DeFi into an interoperable ecosystem with a pre-existing community of users with installed wallets. You know, can this become a hybrid approach where you're taking not something brand new, but something kind of in the middle with traditional daily active users and a massive Cosmos ecosystem that just flip a few other ecosystems like Solana. And you have an installed user base that understands how to access tokens, how to use tokens, and a cult-like, gaming community, and you mix the two, like what can actually happen? We don't know yet because it hasn't launched, but we're quite bullish on the experiment because the narrative behind it sounds almost too good to be true. Now, can that generate other things and like provide a pathway for other entrepreneurs in the gaming space to think about how they can execute their go-to-market? That's a whole different level or a different conversation. But you're right. It is a hits-only business, and even the games today don't really like, they're hits because they generate the transactions and the yield, but like the game frankly suck.
Yeah. What about Adam? Let's do one more of your predictions here for the ETH expert. The Ethereum merge will be delayed by at least 2 months, but be successful just like every other previous hard fork. What's going to happen like around and after the merge? I know that's a little bit of a $1 trillion question, but what's your perspective on it?
I mean, I have no reason to doubt the developers' capability of continuing on the roadmap that they've been successfully building for the last 6 years. Vitalik recently in an interview said that they're looking at July 2022 for the merge to happen. So it's already, Q2 is what they said originally. It's now Q3. So I think I can check the box on, on that prediction. And obviously everybody's wondering, like, is that going to reduce ETH gas fees? No, it's not. It's going to create a proof of stake blockchain, which is going to have all sorts of other benefits. For obviously ESG is a huge like blockchains under the microscope because it's extremely energy intensive. So let's make Ethereum a little bit more efficient in terms of energy usage. That's great. In terms of cheaper transactions and scaling, I don't know if you've used Arbitrum or Optimism or Metis yet. Those are all optimistic rollups, and transactions are under $10. Some of them are now under $2. I think Arbitrum just rolled out a really nice upgrade. And there's some very, very high quality projects that are developing on those rollups directly, not just moving their code onto the rollups from Ethereum. So I expect those to be heavily trafficked. I see a lot of TVL growth on those rollups. And I think, the holy grail of like ZK rollups, ZK syncs is going to get a lot of attention this year. So there's these scaling solutions that are happening today that can alleviate a lot of the pain that Ethereum users feel in terms of gas fees. What's going to happen in the future after ETH, once the merge is complete, we have a proof of stake blockchain. That's when the developers are going to go back to really focusing on ZK proofs, zero knowledge proofs, and sharding to really build out the rest of the roadmap. And like I said, I have no doubt that they will accomplish the goals and the vision. Everybody should follow Danny Ryan on Twitter. He's like the project manager extraordinaire for the ETH dev team. Super, super smart guy, very easy to understand. And that's a way to kind of keep up with the ecosystem. I'm an OG when it comes to Ethereum, and I for sure have taken some profits or moved some of my allocations to other chains, mostly because Jason and Boz convinced me. But it's certainly like where I'm going to be holding the majority of my assets because of its decentralization and the security of the network. You really have there's really nothing that comes close.
Yeah, I'm excited to see the L2s kind of get plugged into the on-ramps directly and see more get built out on those. I feel like that's an exciting thing. I know Jason, Mr. like maximum exposure is like in a zero ETH position in the way that he was in a zero Bitcoin position a year ago now, because no one YOLOs harder than Jason, which is what I love about you.
Well, it's like I want ETH so bad that I'm willing to trade all of it for something that will outperform it so that I can one day return and have more ETH. And oh my God, it feels so in our group chat, it's like sacrilegious. People will be like, I can't believe it, but I'm swapping some ETH for something else. And people, they report the news like as if like, oh my God, guys, stop me if I'm crazy. So yeah.
No judgment, Jason.
I mean, Boz did something similar where he swapped both of us have now swapped all of our Atom tokens for Osmosis, even though we fucking love, Atom is like the holy grail of the Cosmos ecosystem. Yet we have like in the game of making as much goddamn money as possible, Osmosis is a good car to drive you to getting even more Atom. So
every time I think you're crazy, you just end up richer. So I don't know what to do with that.
Well,
Midas
also
touch, man.
By the way, just for not financial advice.
No, this is not. This is but
But with 94% yield or 96 or whatever it is,
it gets all the airdrops. It's got an aggressive team.
The Ethereum bridge,
lead researcher at Cosmos. He's a genius.
He is next level. You got an ETH bridge coming this quarter. People are bringing Bitcoin. You have Evmos, cross-chain compatibility and interoperable smart contracts. And it's like,
money markets are opening up. Kava is on fire.
It is overwhelming with what's happening in terms of the development within the Cosmos ecosystem. But Osmosis is
it's also
next level.
I also find it quite easy to use. As a like certified non-genius, like all the tools that I use on
easy, cheap, fast.
We're super excited about the next NFT marketplace that appears on Cosmos, because Cosmos NFTs will probably have new capabilities, and like that could be a potential moat for that. And so everyone should keep their eyes out for the next for whatever the open sea of Cosmos is going to be. Do we know what that's going to be yet, or what's the
Stargaze? I guess is the only NFT chain.
Stargaze and Omniflex are the leading candidate, but I think Stargaze
we're all paying attention to these. For that reason.
Well, Stargaze is essentially positioning itself as becoming the OpenSea of Cosmos. So it remains to be seen, and I think they're launching their product sometime late February. So super excited about that.
What's interesting about this whole Cosmos renaissance is I don't know how many institutional research papers I read last year that showed the amount of VC capital that went into the Polkadot ecosystem. And I kept asking questions to our group.
It was the most held token, Polkadot.
Why? What the fuck is going on in Polkadot?
I almost feel like it was because Polkadot did a good job of getting everyone to invest in their round. That was my only conclusion. It was like, oh, here's a well-run sales process.
Yeah, it's Gavin Wood, an OG Ethereum developer, who said, I can do this better than Vitalik and co. And that narrative must have stuck. I mean, I've bridged some funds to Kasama and Polkadot, and I honestly, it's nothing special. Perhaps the shared security of like the Polkadot chain and all the parachains is cool. But I really feel like the Cosmos ecosystem, with its soon to have shared security model, and the IBC, where you have interconnected applications and then composable smart contracts, people have no idea how powerful that's going to be. There really isn't even a very liquid money market in the Cosmos ecosystem yet. But like Kava just only recently implemented IBC functionality where you can, leverage assets and then borrow and then use that liquidity elsewhere. So the Luna Cosmos ecosystem connection, bringing stablecoin liquidity, the ETH bridge, which is soon to be launched, or it has launched, but soon to be a functional. It's definitely the year of Cosmos. Another one of my 2022 predictions.
Yes. I will give you my small smooth brain like Polkadot opinion. So I have a very small position in it. It literally is, my whole thesis is basically just like slow and steady, and they have a developer centric approach, like because of testnet. And so like I have no qualms or no belief that like it's going to have a crazy breakout year, but I think like over the long run, if developers like really prefer that, there's a chance that it outcompetes over a really long time horizon. So I have like a hedge in there, but I'm also like buy and hold forever because I can never bear to sell anything. Like that is how my brain is broken. But yeah, I will say like it is almost unusable. Like the wallets are terrible, the UI is terrible, like everything's confusing because it's for developers. So like I have some bags, but I have a terrible time using it compared to Osmosis, which is actually like fun and I look forward to interacting with and stuff. So
Polkadot strikes me
I
as
would,
TBD. It's always, one big milestone away, one big launch of a thing that's going to make it all happen. And like, I'm going to let that happen. I think Polkadot is real. Cardano is not. And so I'm going to let Polkadot become real at its own pace.
Yeah. Okay. So one of my favorite things about a question that I know is a Jason question that I want to ask to all of you guys is like, which is always also my favorite thing, is just like, let's get fucking crazy and like look out 10 years and how big could this go if everything goes right? And what is the everything that needs to go right?
What is this? Is it crypto? Is it our fund?
It's your fund. It's your fund.
Okay.
I remember when I was like talking to Squid DAO, this was the question that you had for me. And
Right.
like, I think it is very fair to turn that same question to you. And 10 years is a long time.
If there is a Cambrian explosion of apps right now, we are going to get a lot of credit for allocating a lot of money and helping a lot of people get in right now. And that credit will compound over time. And where I see us in 5 years is we have a staking service that has several billion in proof of stake tokens on each across them. And we might even be involved in governance in all these platforms. We will have, with Kingsley, we'll have several billion under management. We'll probably also have developed a reputation of just doing this properly. And we'll have established other sub-advisor arrangements with other types of treasuries. There should be companies or maybe even large DAOs that we should be operating their treasuries and putting them to work. I think an emerging theme over the next 5 years is what are we doing with our treasury? And there's going to be a mix of options of put it to work in DeFi yourself or work with professionals that have a track record. And we're going to be in that mix because we're early. And gosh, I also think that we're going to have probably a stock ticker where we're going to securitize the yield on our staking service. And so we'll be getting access to other types of entities that wouldn't be directly writing a check normally, but they come in through public markets. And we'll start to provide exposure to our portfolio through that.
There's
So,
actually
go ahead, Bob.
Sorry, and just to touch on that, I don't want to take your position here. There is a fund already doing that where they're securitizing the yields based on their staking service, their institutional grade staking service, and taking those securities and actually providing access all legally, all by the book. It took them 3 years of legal work and millions of dollars, but it's I believe it's forget the name, but I'll get back to you. Bridge Tower.
Bridge Tower.
They're one of the most innovative funds out there. It's led by their team. So it's one of the few funds I really look up to in terms of bleeding edge innovation around financials and what the future entails. Like what they're doing today is what could be the norm in 10 years.
Jason, you sound pretty convinced that we're going to make it. Eric, no one's ever asked me this question, but because I've been so confident in the industry, and fortunately you haven't had any sort of regulatory black swans yet. Everyone thinks about it, so let's not talk about it. I'm very confident in the Four Moons Partners' abilities to execute and be there, and our commitment is not questioned. Same thing goes for the Kingsley team. What I fear, because I've been here before, is burnout. It is so easy to get obsessed and just immersed in this culture and this industry, where you end up just loathing doing something. I'm so passionate and I love it so much. I think a healthy mix of work and play and taking care of ourselves is something we neglect. I started working out again for the first time since the beginning of COVID, last week. and I was a like total gym rat. So I think it's something that I overlooked. And it's this is advice probably for everybody who's listening and everyone who's in crypto, to take care of yourself mentally, physically. It's such a grind. This industry is such a freight train. You got to keep up. So yeah, that's
the guy whose job is to minimize risk at our fund. His answer to the question of where will we be in 10 years is, I hope I don't die.
I didn't want to say it outright. If one of us dies, you gotta.
What happens if this works? I'm not dead. Okay.
He's minimizing risk, addressing the downside first. That's what you want to see.
The dreamy future.
So where I see us with this fund, I think similar to what we did with our initial fund, which is proving market thesis around DeFi, generating success for our LPs and us in parallel. I think this new format where, as far as I can tell, and maybe your audience can tell me if I'm right or wrong, but as far as I can tell, we're, I think, the first sub-advisors that is managing or co-managing a DeFi fund in the space. And I think this position for us, making Kingsley's fund successful, generating success across the board, will allow us to position ourselves to replicate this same exact success around consulting and advising of other funds, whether you're a digital asset fund or a traditional institutional grade fund, and allow us to actually scale our knowledge and strategies to hire out other or bring on other people, other core team members to essentially become general managers managing those relationships and those strategies, but across a variety of relationships across the market. I don't think it's a one fund take all. I do think the DeFi fund that under Kingsley's leadership will grow to be, in the billions. I firmly believe that. But I also think there's quite a bit of need and demand for other funds to tap into our knowledge, our know-how, and figure out a way to introduce DeFi products that cater to their investors and their book of business. So I definitely see this as a way to essentially creating a brand new market around DeFi fund managers or consultants or sub-advisors for an emerging market. That's where I see it evolving in the next 5 to 10 years.
Which, I mean, when we think about 5 to 10, like 10 years feels like a long time from here, but if we use the Web 1 analogy, like that would only get us to 2005, which is really like the value hadn't even really begun to accrue. Like Google was bigger than it started for sure, but like all the real returns happened between like 2005 and 2020, frankly. Like
it's crypto time though. So
true. Yeah, totally. It's crypto time. Although like the like adoption rates have been like, have you seen the graphs where they overlay like pixel for pixel? I can't believe, like, I think that they will diverge. Like I kind of expect crypto to break out.
They're already diverging. It's actually growing three times as fast as the internet did at its peak in terms of crypto overall. So again, it's like this is the early 2000s right now, potentially for adoption, but in terms of like technical innovation, we're in like the 94.
Yeah. Okay. Is there, what I was trying to think about it, Boz, you might know this, is there like a historical analogy for a fund that was like internet focused starting in like 1993 or 5 or something and spent 20 years, or like Constellation Software is the closest thing I can think of. Sequoia, maybe you could say, like.
Yeah, those early VCs that were blazers,
trailblazers
of the internet.
Kleiner Perkins.
Yeah, Kleiner Perkins. I mean, for decades, and their track record speaks for itself. I would also say Andreessen Horowitz, like there's no better leader in the space than Mark Andreessen and his vision behind where this is all going.
Well, we've also talked about at some point our fund would, at a certain point, we would capture enough fees from it over the long term that it could fund we could then seed another new fund from Four Moons that could become like a VC fund, and then we could go downstream, and then so we could have this entity that's basically downstream, warming up companies, putting them on our radar for then all of our other sub-advisor relationships we have.
Yeah, but I think back to your point, Eric, the success. I mean, yeah, the big name funds would be the Kleiner Perkins of the world, the Sequoias, the Andreessen Horowitz of the world, and maybe I'm sure I'm forgetting others in Silicon Valley. But those seeded the internet. Those VCs essentially seeded the innovation behind the internet as early as the 70s and 80s, right? So it makes sense to just I would have to do some more dig into more like about like who were the most successful or top 5 VC funds based on the bets that they've taken, but you'd have to dig through the archives. So, who bought on Apple? Like,
no, I hope this is planting the flag of the Sequoia of 2060, and that's how we look back at
Thank you.
I'm curious. Like, I've wrote this note a couple times as we've been talking. Like, it is interesting for a very like DeFi movement, like you guys are all in DAOs, all of this shit, like why so TradFi? Like, you're starting a fund, you're talking with RIAs, like you could I know with your Discords and the networks and followings and newsletter subscribers that you guys have, you could just as easily go the like DAO route, start your own treasury, like be a nons and allocate crypto just like Squid DAO does or something like that. Is that something you gave thought to? Like, why are you working hard to bridge this world?
There is such a huge opportunity that we would be crazy to say no to it. So like we were doing a friends and family DeFi fund, figuring out what our next step was. We had an idea, but then you have the opportunity to take your existing thing that works, and someone says, here is a $40 trillion market that really does not have a product being sold to it yet. And we already know that they want what you have. Like we have to go pursue that. This is an opportunity to get big very quickly.
Yeah.
And it doesn't limit us from doing other stuff. That's how we came up with this structure. We have total flexibility to go spin up other entities through Four Moons.
Yeah, I think, I mean, I have strong feelings about DAOs. This is just purely opinion based, maybe unpopular. It remains to be seen around if they are successful in the long term, because turnout for governance on DAOs, everybody wants a DAO, but nobody wants to govern. I think it's like on average less than 1%.
It feels like decentralization marketing.
And maybe it's early, I don't know yet, but it remains for them to actually achieve product market fit, generally innovate. I've seen tremendous amount of people create marketing DAOs and fail on execution. So it's like everybody wants a DAO, but who's leading it? And leadership by committee, even at scale, is doomed for failure, I think. And that's not to say that it won't happen. So I'm generally against DAOs for where we are in the market. In terms of being anon, I'm also fundamentally about being anon, because the market that we're in is relationship driven, and you cannot build a relationship if you're anon in this space, especially in the traditional markets. And if we're going to attract family offices, serious capitals, the equity market globally is $100 trillion. We're at the $200 billion mark. Yeah. How do you foster those relationships to attract, boring money or traditional TradFi money? Yeah. Well, you do it by doing it by the book, having a face, shaking hands, those relationships, going to meetings, going to conferences, having speaking engagements. That's, those things, even in a remote first culture now, especially with what's going on, relationships matter. And, hiding behind an anon is, as for this particular market, isn't something that would, that could yield to the vision that we're all pursuing.
Yeah, I mean, you guys hit it with the faucet. It's just a lot bigger and it flows a lot faster from the traditional markets. I also think a concern for DeFi native funds, whether they're DAOs or like an Enzyme.Finance where you can build your own index token, people can invest in that, is regulations. We haven't really seen how KYC or accredited investor requirements will impact DeFi. And that's one of the things Kingsley pursued ahead of time. And it was a very heavy lift. It cost him a lot of money. It spent a lot of time on it. And we're super grateful for that. It's gonna, like Jason said, we're instantly gonna allow ourselves to scale. It would have taken at least 6 to 12 months for us to end this current fund and do it all over again at a bigger scale. And Kingsley is a great conduit for us.
Yeah, it's awesome. I'm super happy for you guys. I mean, like, I've known Jason at least a long time, and Adam, it sounds like you share his philosophy of like give, community. I can't say how many people have like thanked me just for introducing them to Jason, because he's been so like gracious and open with time and supporting people and bringing them along, and from career advice to allocation advice to troubleshooting a fucking MetaMask wallet. Like, you guys have been nothing but like giving to the community at large. And I mean, that karma's coming back. I'm super happy to see like you guys just grow into this amazing opportunity, like well-earned, amazing sort of product market fit. I'm psyched about it on your behalf, and hopefully everybody who invests with you as well.
Well, thanks, Eric. That means a lot.
Thanks, man.
It's been fun knowing you throughout this journey, and going forward too. And I've enjoyed meeting people in your audience who reached out. Some of them I've invited into my community because they're so great.
Yeah.
So would love to keep meeting more people in your audience. Again, like, people can book time on my Twitter. I have my Twitter link. They can book office hours with me to talk crypto. I'm down to talk about anything, except for whether or not your NFT collection is going to be successful.
Yeah, I don't want to wrap up quite yet, but I do, like, I know anybody who wants more can find you guys on Twitter all the time. Probably too much. Your Discords, Adam and Jason both have somewhat private Discords. Adam, your newsletter is amazing. Boz, I want to see more of you on the internet. I don't know where to find you.
I
know you tweet.
Twitter.
Okay.
Find me on Twitter. Follow me on Twitter.
I got to get your blog too, it sounds like. So I know that the fund is unfortunately like not for everybody, right? Like, people have to be accredited. I'm assuming there's minimums involved because you got like real RIAs and stuff.
It's super straightforward.
Okay.
The fund is for two types. Like, you just got to meet two requirements. If you are accredited, check. If you are in the US, our fund minimum is $100,000. And if you're non-US, due to just regulatory overhead, we've made that $1 million. And you can come in as an individual or through an entity, depending on which category. And ultimately, we would connect you with Kingsley Capital. If you reached out to us, we would just refer you to them, and they would walk you through the process properly.
Okay. That is good to know. I think, and just kind of standard.
You should also be bullish on crypto and long-term. This is like, yes, it's a liquid fund, but just assume that this is the money that, like, when you normally buy stock and you're like, I'm long Apple, it's like you're putting it in our crypto fund and it's like long crypto.
Yep. Yeah. And I there are seemingly more and more people, even like kind of the money managers and financial planners and stuff that I talk to, who are like, yeah, no, totally, like 1 to 5% in crypto makes a ton of sense. Like, that might be where the next tech, I'm very interested to see if the next sort of tech revolution, the value accrues to tokens rather than stocks. Like, that is a thing that everybody who is like an Vanguard index person, like I have been my whole life, should be like deathly afraid of, that you just like miss this huge driving factor of the next 20 years because it happened in tokens and not equity. I don't know if that's how that's going to work. Like, there's still plenty of public crypto companies like Marathon and Coinbase and stuff like that, but a lot of growth in tokens, and the tokenomics versus the stock equity is a kind of a new paradigm.
Or tokenizing stocks. I think crypto tokens will be at parity at some point with the stock market, generally speaking, just of how fast the space is innovating, how fast it's grown. But I think there's also the opportunity for tokenizing stocks that can also, there's, again, this hybrid, this combinatorial innovation. It's not this or that. I think that the real answer for everything is somewhere in the middle. And that applies to all sectors, markets, companies, and industries.
And we talk about this too in my Discord, Eric, all the time. Like we're seeing assets cash flow using new ways, like with convex. And so I think we're just going to learn more lessons every few months. There's going to be a new way to design a token that clearly presses the buttons of token holders and gets them to want to own it or do something with it. And I think you can just imagine 3 to 5 years from now, the sophistication of token design is going to be really appealing. And we're going to be looking at like, what was the point of a stock? What was that supposed to do? And we're going to see that the token achieves more goals for the company. Like Boz just said, we'll probably see stocks wrapped into tokens because like the one property those stocks probably have is governance for shareholders. But like they're going to have other sort of superpowers once they're tokenized.
Yeah, I mean, they kind of come. The bundle of a stock is basically like governance and dividend distribution, right? And like
basic cash flow and the same kind of theatrical governance that's not real.
And for tokens, you already see, so like, you know, like the Squid DAO interview I did, like you already see governance, you already see dividends, but there's this other interesting mechanism of like, hey, I can lock it. I can like commit to lock this for 4 years, and that gives me more privileges and more yield. And that's like, I would 100% I'd lock my Berkshire Hathaway for 20 years if it meant I got like a higher share of dividend yields. And like, there's just so many interesting things that can happen in here.
And I think tokens are now a tool to deputize your stakeholders to do things.
Yeah.
Like at a bare minimum, hey, have my token, get credit for being early, go pump your bags, you buy it, go tell people about it. Yep. You could lock it up, that could even do nothing, but you take it out of circulation to help even more. Maybe Berkshire Hathaway says lock it up because if you lock it up, you get half off on your tickets to Berkshire Hathaway.
Shit, yeah, right? I'd do it just for that.
Have other fun incentives.
Yeah,
you know.
Okay, so for the people who are not going to be investors in the fund, but are like made it through this and are like, holy shit, like I want to get smart about this. I want allocation to this. I can't go to the moon with them. This is not the only way to get involved and invest in crypto. Jason, I know in particular, I want to pull your string on your like the portfolio theory rant that you went on in Yieldopolis, because I think it's an all-timer and just like how you think about it. But like Boz and Adam, like drop your personal hot ball of money wisdom on us as well for people who are just either not going to, you know, don't have a vehicle, not accredited, international, whatever, and are out there kind of like doing this on their own.
I think my thing that you're referring to, correct, you know, tell me if I'm forgetting anything, but the high level was like, here's how I think about crypto investing. And a lot of it came from a lot of what Adam and Boz and I discuss a lot, but you have this goal portfolio and you're going to throw out, it's going to be of assets that you're really excited about owning long-term. And maybe that goal is, I'm going to make up numbers, but 1,000 ETH and like 10,000 Atom tokens and like $1 million in stable coins. That could be the goal. And then you have to build some portfolio that's going to get you there. And what the DeFi strategy is to build a portfolio that's going to help you earn yield so that you can sell that yield to start buying your dream portfolio, or you can compound your yields back into your strategy so that you earn a little bit more yield tomorrow than you earn today. And this is kind of what you do. And things that I think about along the way are, I've always believed in having a concentrated portfolio. You only need to have 3 or 4 tokens because like there actually is enough information out there for you to take high conviction bets. It's not just it is rolling dice, but it's also not. It's like you can do your homework. If you own too many tokens, you don't really get credit for being right when they all go to the moon. Like you need them all to go to the moon. You want, when one goes to the moon, you want your life to change a little bit. And so concentrated, and then, yeah, that's kind of how I think about things.
I would say there's a common characteristic across all successful crypto investors, and they're all resourceful. This is a do-it-yourself industry. So if you're not the type of person who wants to seek the required information to be successful in this industry, it probably isn't for you. And there's plenty of Vanguard stocks that you can buy, like for your mutual funds. There's then maybe the next level up, which is like Bitcoin and ETH. Not financial advice, but that's a really good way to get started in this space. Beyond that, like there's a great essay written by Ryan Sean Adams from Bankless. It's called The Crypto Barbell Portfolio. it's must read. It's kind of the most important intro piece to constructing a solid portfolio for any new investor. It's very simple to understand, straightforward. It gives you the exposure to the stablecoin concept, and stablecoins are revolutionary. They're going to be in everything we do within the next 5 years. So start there, and then I think naturally most people fall down the rabbit hole and find their next favorite layer one or altcoin or community or NFT project. It's such a fun experiment, and it's like a choose your own adventure based on where you want to spend your time. And most people I've spoken to find something that speaks to them that they really fall in love with and stick to it for a long time.
Yeah, absolutely. So I guess it really just depends on how, to Adam's point, like it depends on being resourceful, just depends on how committed you are into participating in this ecosystem. No different than, hey, I want to learn the stock market or options trading, but I don't want to put in the time. I just want to think about passive investing, right? So from my perspective, regardless of where you are on the spectrum of how involved or what your time commitments are and everything else, I would encourage people to start today. If you know nothing about crypto, you don't even have a crypto exchange.
If they knew nothing about crypto, they would have stopped listening a long time ago, boss.
Oh yeah, I know. But there are, I still get, my inboxes and messages, Instagram, whatever, is flooded with where how can I start? Mm-hmm. Again, we're super early.
Yeah.
So I guess my answer will be a 3-part answer. For the brand new person, get a crypto exchange, at least start yielding on stable coin, right? I know Gemini offers 8%. It doesn't sound like a lot, like from our perspective, but something is better than nothing, and at least you can earn interest.
It's a lot more than a savings account.
It's tremendous. I mean, it's exponentially more than a savings
infinitely
account.
more.
Barely higher than inflation.
It's barely higher, but you'd be making money. But the point is, at least deploy capital and think about capital efficiency. Make money while you learn. Right from there, I know we started with a company out of Korea. It's called Haru Bank, and Jason and I were earning 15% on our ETH, compounded daily, right? And that was something. This is well before like Compound came out, well before DeFi came out. But the thing is, we wanted to deploy money or value of assets to earn while we're learning.
Yep.
So earn while you learn. That would be something. The second is, begin subscribing to specific podcasts, follow, join the Discord of Adam and Jason, and then tap into the community to understand where to start. And there's a lot of people, I know I sent my wife there to learn about, where do I deploy capital? And what's the easiest way to deploy capital? How do I install a MetaMask? And there's so much content out there that guide you through this process. And then from there, take to the next phase of how do you get a stable coin from an exchange into a Web3 interface? Where do you stake? How do you stake? How often do you should be learning about transaction fees? And just, again, no different than learning how to ride a bike. These skill sets will compound over time, and so will your returns.
Yeah. Awesome. That's an amazing sort of summary. And Jason and I's first conversation is an amazing kind of like 1 and 201 of all that stuff. To go actually get involved. If you still haven't, go listen to it again and let it compel you. Because it will.
Jason and I share fairly similar investment philosophies, which is like it's very Bill Ackman like. It's very consolidated.
Yeah. Not
really diversified, really aped in just optimizing for the narratives around the potential osmosis, Luna, and what's your third one, Jason? I don't know.
I have 95% of my net worth in 3 tokens right now.
Yeah. So
amazing. That's amazing.
Yeah, it's considerable. I would say me as well. But just keep in mind that generate a thesis, follow the thesis, and follow those projects, and but also be a student of history, because these things tend to repeat themselves with these investment cycles.
They do, yeah. I went back and read the Technological Revolutions in Financial Capital, the Carlotta Perez book, and I was like, you could chart all these things on it. It's amazing
Totally.
how, and then you lose perspective, and it feels like, oh God, everything's new and overwhelming and scary, and everything's moving so fast. And then like when you can zoom out and like plot it all, and then the sense of relief I feel when I remind myself, or like get reminded like how inevitable this is kind of like, you just can't be over. Like, I feel like I can't possibly just open my sail enough to the wind of crypto that is coming.
Totally. I think I don't know how many of us have ever been around a conversation where it's like, oh, I wish I had the opportunity to get in Google,
Yeah,
and Amazon and all these things. And I'm sitting there like, you have innovation around you and it's staring you at the face.
Yeah.
All you have to do is reach out.
it just looks a little weird because it's fucking innovation.
It's permissionless, it's decentralized, it's already scaled. It's these
Yeah, but
projects
it's called
and
Pancake Swap or something, or Sunday.
yeah. Well, I mean,
I can't believe I don't want to invest in Spooky Swap.
You got to cling your daily boo and compound it into the graves and get six zombies.
Yeah, well, how confusing was Thanksgiving last year? Like, past the yams, like, what are we talking about? Right? It's just, you can't even fathom like how confusing.
When there's like $100 million net worth individuals with cat profile pictures on Twitter, it is a little bit weird to jump in with both feet, but everyone's very nice. They want to help.
Yeah.
It's a little scary.
More from anime avatars than I have from anyone else about crypto.
Yeah, nobody's taking themselves too seriously, but everybody really is. I think, Adam, everybody that I have met in crypto really, with few maxis aside, like shares your like the let's grow the pie, let's teach everybody. We're all here to build. We're all here to invest in each other, and really like all of the incentives of the whole community are aligned in ways that most people never have aligned. Instead of, even in Silicon Valley and startups, like people have this kind of veneer. Everybody is helpful and they do want to help each other, but there are very intense rivalries and competition. And I feel like we're not even close to that yet in crypto. Like everybody just wants to like win and help win and bring everybody along and build new cool shit and teach new people how to use it. And almost every Discord and Twitter conversation that I've seen is just helpful and constructive.
Yeah.
And don't be afraid to ask questions, and people will help.
We've had people in funds managing DeFi reach out to us, and we do share notes because our philosophy, to Adam's point, is like a rising tide raises all boats. We want more people to grow the pie. We want more smart people in finance and tech to innovate these products and services. It only helps us collectively be more successful together.
Absolutely. I love that. I love you guys. Will you each drop your like Twitter handle and or blog and or like wherever you want people to come find you and learn more about you or the fund or your writing or your projects or whatever?
Yeah, absolutely.
Yeah.
I'm at Boz, B-O-Z _ my last name, M as in Mary, ENZALJI.
Don't worry.
Find me on Twitter.
We'll put that on the show note. We'll put all this stuff in the show notes.
Oh, cool. Sorry.
And like link everybody. No, I'm glad you spelled it. Like that will increase the odds that I spell it right. And I do want you to say it exactly like that. You're perfect, Boz. Don't change a thing. Adam, you're next.
Yeah. So I'm on Twitter. I'm at ace_da _book, ace the book.
Ace the book.
Don't ask me where that came from.
And you are
never
a smoking Doge avatar.
Yeah, it's called the Doge Punk Rocket Scientist. It's my favorite NFT ever. It is plugging. I haven't done a plug yet. Doge Punks is like my favorite NFT project. They're boutique little Doges that are popular memes. So the meme that I have is the Elon Musk on the Joe Rogan podcast where he's puffing a blunt.
Yeah.
And I think that's like the most epic episode. I love the Doge Punk. Check out their NFT project. I'm actually having coffee with the creator of the Doge Punks project on Friday. So nice. I'm excited about that. And And then if you want to find my blog, you can go to Ethropy.Finance and sign up there.
It's a great newsletter. Recommend
and you should.
it.
Yeah, it's an amazing blog.
And I'm just at Jason Hitchcock. That just one word. So yeah, I tweet.
And both of you talk all the time on Twitter. You share very openly positions. You answer questions. Like I think all of you guys are like active and helpful on Twitter. Highly recommend it. I learn a ton there. It's where you find people sharing great stuff. There's just so many good things there. Boz, you can come back next time and we'll just talk about space the whole time. And we don't even have to mess with this crypto stuff. And we want to get into some space shit too, but I don't want to complicate this one too much.
Oh man, that you're opening up a Pandora's box of, it's like, if you think I'm passionate about crypto or passionate about DeFi, just wait.
That's why I wait till the end so I can hang up on you, just in case you just start. Like we'll do that. We'll do that another time. I got another buddy, Max, who's really into space, and I feel like that'd be a really fun episode and something to explore. Thank you.
Maybe we could tweet Elon join.
Let's do it. Did you see Lex Friedman say, like, he's like manifesting? He's like, I will interview Elon Musk in space. Like, hell yeah. I want that.
You see how easy it was to transition from DeFi to space?
The interplanetary file system is already thinking ahead. Like we're all ready for it. It's gonna be beautiful. All right, thank you guys so much for doing this. I'm psyched for you. I've said it 1,000 times. I'll say it again. Thank you. I'm excited for you. Can't wait to see where we get in 10 years when you're all gone to the moon, all 4 moons.
All right.
Appreciate it. Thank you so much, Eric.